This is the January 2 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Matt Bennett. He's at agmarket.net out of Windsor, Illinois. Naomi Blohm joins us from Total Farm Marketing out of West Bend, Wisconsin. And Chuck Shelby is here from Risk Management Commodities out of Lafayette, Indiana. Commodity Week is a production of Illinois Public Media. It is public radio for the farming world, where we're celebrating 40 years of the Closing Market Report. That's our daily program. If you've not tuned in for that, please do so at willag.org, willag.org. It began in January of 1985. Let's turn our attention now to our program for the day and get a list of items we should discuss. Matt Bennett, I think I'll start with you. What's on your list for the day?
We've got a big report coming out, of course, next week, and so we want to get everyone's opinions on what potential changes we might see there, first of all. And then, second of all, just talking acres a little. I know there's been a lot of talk here lately. I'm sure we'll talk about South American weather, but I'm definitely interested in hearing what the other two have to say about upcoming acreage for 25.
Naomi Blohm from Total Farm Marketing on your list. Anything else?
Yeah, let's build on what Matt said and then add to it just the seasonal tendencies for grain markets during the month of January, because that could be a factor to be keeping an eye on as well, in addition to that USDA report.
And Chuck Shelby out of Risk Management Commodities in Lafayette, Indiana.
Can we see 2025 turn into a market that turns a trend from negative to positive over time?
Let's start there. I am interested to see, Chuck, what you're thinking, because I believe the last time we had you on, you were of an opinion that there might be just a bit of a market rally. Have you thought more about that, and are you thinking that we could see a change in the trend in 2025?
I'm pretty impressed with the way corn has behaved this year. It looked really negative. We thought we were going to go down a lot lower than we went. So overall, the trend in corn is probably the most positive out there. And as Matt discussed there, I have been of the opinion that the yield in corn will come down in the January report.
Well, tell me more about that, and I'll get to Naomi and Matt and what their expected changes for that USDA report will be in just a moment. What kinds of things do you think will change, and how much of a change in yield for corn do you expect?
I think we're looking for at least a bushel lower. And it comes back around to the fact that, it is a very good crop, but a lot of the crop got harvested from 12 to 14, 15% moisture. And that's an automatic yield reducer from what the crop could have been if you'd have harvested from 17 to 21. It's just a fact of that magic disappearance of yield as corn dries out. So I think the weather was really warm and dry across when the crop finished. And so when you take that into account, that's where we were seeing that bushel, maybe a bushel and a half yield reduction. Possibly the same thing for soybeans. A lot of farmers across the country were harvesting 8-9% beans. Again, an automatic yield reducer from what the crop could have been if it had been harvested at 12 to 14% moisture. So those are the reasons that lead us into the idea that the yield could come down. And I think if it happened, that would give the market a catalyst to work higher.
Naomi Blohm, USDA NASS did move lower their yield numbers in the November crop production report, and they say they do capture some of those changes as is related to yield and moisture content, and they address them. That was a bigger change than many had expected. The December survey of farmers will capture more information. Do you think that there is more downside potential for yield for corn and soybeans once we get to the January reports next week?
I'm not totally sure. To the point that Chuck said about, definitely was drier at harvest, and so at some point that does still come into play. But the USDA did do that big drop in yield already, so they acknowledged the situation. And still, when I think about how I talked to my clients at harvest time, so many said it was a record crop for them, in spite of everything being dried down as much as it was at harvest time. So I'm not totally sure if they do too much tweaking on the yield side. And then we'll see what they do for demand, because they already did a big demand increase for corn recently, so they're being more upfront with that situation. Now, the other thing to think about, too, is that we are now rallying into that report, and so the more we rally, it's going to take an over-the-top bullish news story from that report to get the market to go even higher from here. So some of that friendlier tone and factor could be priced in, but we'll see. I'm very curious on the demand side, because we are still seeing the ethanol numbers come in strong, and even a little bit stronger than current USDA projections. So that's the one that I'm going to be watching the most on that report next Friday.
Matt, what numbers will you be watching, and how do you see them changing?
Yeah, I mean, I've talked about this, what Chuck was talking about for a while as far as yield. I agree, with what Chuck said. I mean, clearly in August, the weather would suggest that you could have robbed some bushels. Obviously, moisture content very low, like Chuck was talking. I mean, if you look at basis, if you look at spreads, maybe the farmer's been somewhat tight-fisted, but at the same time, it wouldn't indicate to us that this crop is, or the stocks numbers would be pushing 2 billion like they were for quite some time. And clearly, we've brought that down significantly. I guess I agree a little bit with what both of them said, but I do feel like a yield adjustment is probably in order. As far as demand's concerned, I don't really look for a whole lot here. I felt like the surprise in December, whenever we typically have a very quiet report, would lead me to believe there's not going to be a whole lot in the way of demand adjustments here. So, I could go along with what Chuck said. I mean, the thing we got to remember whenever it comes to yield is that, let's say you even take this thing down to 182. I mean, you're still going to be looking at over 4 bushels bigger than the biggest yield we've ever seen. And so to me, it's just really hard to get a handle on just how big an all-time record crop is. 5 bushels plus above the all-time record. Yeah, that's a gigantic, but still 4 plus is as well. So my thought process is they'll take the yield back some. Maybe your stocks comes down somewhat, but at the same time, I don't think demand will go up. And if it does, I would be a little bit surprised.
So, Chuck, how much of an adjustment in ending stocks do you expect if we have a lower yield? Ending stocks, while we have talked about a 2 billion bushel number, really is 1.738 by the time we get to the fall of 2025, or 1.74 billion bushels at this point. Will ending stocks change very much, do you suppose, for corn?
Our take on it is probably 100 million we could reduce it by. And I think the other thing that, is curious about corn, if the market has rallied, it's had a strong rally. The basis is improving. So if we have a record crop by the size the USDA is suggesting, it sure doesn't act like it out in, the cash market. So it's another factor in my mind that maybe says it's, overstated a bit. Why are we behaving in such a manner? I know demand's pretty good, but, you put a 182, 183 type yield out there, the size of the crop, just doesn't act like it when you're, looking at the cash market and the rally we've had in corn.
Naomi, what number have you been penciling in as it relates to the ending stocks for corn?
Well, I don't think we're going to see it lower than 1.6, and I would say that right now we're probably pricing in a little less than 1.7, with the market getting over 450 on the board price here recently. So it would be a surprise if we came in anything lower than 1.6, but I really think maybe it gets closer to 1.7. I just don't see the USDA doing anything really aggressive or exciting on that report, although it is a report that can be well known for plenty of tweaks and surprises on market volatility and wild trading ranges on that day of the report itself.
I am correct. Everybody's between a 1.6 and a 1.7 ending stocks number for USDA next week then. Is that correct?
Yeah.
Yes.
Yes.
Yeah. So if you're there, how much more upside, and I guess I'll start with you, Matt, how much more upside might there be in the corn market, and what limits it?
Yeah, I think a couple of things come to mind. I mean, clearly you got above this 450 level. It's something that we'd struggled with for quite some time. 200-day moving average was an absolute wall, and then we spent the last 4 sessions actually above this level, closes above that 200-day. How much more upside could there be? I mean, maybe you go back and you visit that high back in June. I don't believe that would happen personally. I guess I'm a little skeptical. I think that there's still a lot of corn out there. First of all, you're getting a little bit of a tailwind, I believe, from the dry weather in Argentina and southern Brazil. Clearly, you've seen this rally on the bean market well off the lows we had just back, I believe, on the 18th. And so soybean meal and soybeans have kind of led the way. Higher corn's followed along. I guess if I was a producer, I'd probably be rewarding this market. Yeah, you can hope for a little bit more upside here. I'm just not looking for a whole lot. I think the maximum I could see is, maybe you could get another 15 to 20 cents out of here right now. But I think you're going to need some more sinister weather issues out of South America to extend that or even get to it.
So, Chuck, I do have some more questions about where you all stand in the corn market. 100 million bushels or so down, maybe, in the ending stocks, based on probably a yield adjustment from USDA. I think that's what I'm reading from most of you. However, I'm wondering whether the market is putting more attention on what's been happening in South America, particularly in Argentina, as it is an export country for corn. The size of the crop there, which is smaller than it has been for a while, based on last year's insect issues that they had and a bigger soybean crop, therefore, both of which may be limited by the dry weather. How do you put all of those into perspective?
Well, I think when you look at the market pre-harvest, you couldn't find a positive story at all. Everything was, just negative, negative, negative. So I think kind of the market psychology has changed here, and we've seen the funds go to the long side of corn. So, South America, Argentina is just another factor. You've got the second crop Brazilian corn that's, in a little bit of doubt. So again, not wildly bullish here, but I think, again, factors coming together that have tended to make the market a little more positive. I would look at, with Matt, maybe 475 in the March would be top end if we can get a rally from the report. I think producers will reward that kind of price. As you go forward into, past the report, South American weather, South American harvest begins, and you've got another supply on the world market. So I would take advantage of the rally. It's encouraging to see where we were and where we could go to, because again, go pre-harvest, nobody thought we were even had an opportunity to even have a rally like we've had in corn.
Naomi, what do you do with corn? Are you making cash sales into this marketplace?
Yes, cash sales, old crop, cash sales, new crop. Front month corn, if you look at a weekly front month corn contract chart, we're right up against a downtrend line that has been firmly established for the past 2 years. So it is going to take some bigger news for the market to get through it. And so we need, to Matt's point, bigger, more sinister weather coming out of Argentina to really get this market to jump. The other thing that we need to remember, too, is that, we had that big push of export sales. A lot of it was just because we had cheap corn and it was good value, but now we've got the U.S. dollar, soaring higher. We've got the Brazilian currency lower. And so we're at that point where if the weather ends up being okay enough in South America, people around the world are going to start to be focusing on making their next purchases for what they need to import from South America. And keep in mind, too, we have so many uncertainties that are going to be coming up with the new administration in just under a few weeks. So we have to start trading that uncertainty again. And most people are thinking that it still is going to affect trade and trade issues. And then lastly, I think about the customers I'm talking to, and my clients are already telling me more corn acres for next spring to be planted. So the world is going to be aware that the American farmers are going to come in and save the day again, and we're going to be planting more corn acres in the spring, which is going to keep that carryout, again, at a comfortable level, maybe taking it back closer to 2 billion bushel carryout for that next coming crop year. So yes, cash sales, old crop, and even be thinking about cash sales for new crop.
Chuck, because she mentioned the number of acres for the new crop, and this was something that Matt wanted to know more about, where do you stand on acreage for next year in the United States?
I think we could be at 94 million, a couple million increase over this year. I think there's a certain amount of producers that are going to head that way, but there's also producers who, are cash strapped here with the, higher input costs that have stayed high, and beans are a much cheaper crop to plant. So I think it'll grow, but if it grows bigger than that, then you're going to drastically pull acres away from beans. So there's a fine line out there. I can see it growing, but I'm not in the camp of some that think it could be 95 or 96 million acres.
Matt Bennett, where do you put acreage at?
First of all, I think that the combination of corn and bean acres will be lower this year than what they were last year. Clearly, 21, 22 were quite profitable. 23, we weaned off of that a little bit, but then 24 is pretty rough overall. Whenever you look at profit margins, 25, the projections don't look good, as we all know. And so I think that you're going to look at maybe drawing back just a little bit, probably going to some other crops where folks have the chance, or it's more common to fallow ground. You're probably going to have some of that occur. Corn acres, I'm pretty close with what Chuck's thinking. I mean, we've been kind of centered around this 93.5 to 94.5, somewhere in there. Obviously, a lot can change between now and that March 31st deal. I do think bean acres are going to struggle. Whatever you pick up with corn, clearly I think you'll lose that and then some as far as bean acres are concerned. And so, one thing that, of course, again, could change that is, let's say Argentina does stay dry and, you go ahead and you resume this rally and get maybe back to some of these levels that we saw, just as recently as late fall. So, if you would take, for instance, November beans back up to that $11 level that you saw in October, that could change the scope of the discussion some. But for right now, I think you're going to lose overall acres, and I think that the beans will be the biggest loser of the two.
Naomi, let's come back to you. You wanted to talk a little bit about the seasonal tendencies at this time of the year. We generally think about the winter as a doldrum time. What seasonals are there for corn, soybeans, and wheat?
Yeah, for the soybean market, there's a pretty strong seasonal tendency that we see prices sell off as the month goes on. And in fact, when you look back at the last 18 years, 15 out of the last 18 years after the January WASDE report, soybean prices press lower after that report into the end of January. The corn seasonal can be just a little bit more edgy and sideways, and then the wheat seasonal ends up that it's a little bit lower to start the month off as well. So, I'm just really mindful of that. Of course, past performance does not indicate, future results by any means, but that seasonal really worked pretty well last year. And I'm quite mindful of that, especially when we really have the reality of a bumper crop in Brazil for soybeans. And if they take some of the heat out of that Argentina forecast or put some rain potential back in, I think you'll see the bean market just flip over on itself pretty quick, unless we get some unforeseen demand news to perk it up and make it go higher. But again, my mindset is a little bit more defensive right now.
It worked fairly well last year. We were much higher. We were higher last year, of course. I think March corn opened the year at $5.12. January beans at $12.43.5. How much downside do you think we might have based on your look at the seasonals?
So my outlook would be, potentially that we could see that market go $1 lower. When you look at where seasonals are now and where ending stocks are right now, we have ending stocks of 470 million bushels of beans. Last year, 342. The year before that, 264. So we still are at a situation where ending stocks, the perception is that they're growing. So I think that ultimately is something that's going to make the market turn around and push lower. If we see the March bean contract get below the $10 area and get back below $9.90, then I think you can potentially see that downside projection maybe heading back to $9, again, depending on how that South American weather goes. So I'd want to be defensive. The next hurdle on the March bean contract is the 100-day moving average, just about a nickel away. And so if we can't get through that tomorrow or early next week, I think we see the profit taking come in, and then that seasonal trend pick up and prices turn around and start to work back lower.
Chuck, Shelby, on the soybean side of the ledger, USDA in its last reports put yield for soybeans at 51.7 bushels to the acre, that 470 million bushel carryout that was mentioned by Naomi. Can there be a change in one or either of those?
If they bring the yield down to 51, that would change things. Another factor that I'm watching on the beans is I know the Trump administration's proposing tariffs or whatever, but what if China decides to sign some kind of agreement? Maybe it's just on paper, how good it is, we don't know. But I could see them, making an agreement with the Trump administration to buy grain again. I think psychologically just that could give us a nice bump in beans, unexpected bump. I'd be probably a willing seller of that, but I think that's a factor that's not talked about much in the positive light. It's generally just talked about in a negative light with what the Chinese may or may not do.
Would you be selling old and new crop if that were the case?
Yes, I would take advantage of it. Again, it would have to be proven, but I think psychologically the market would look at that as they're going to buy. They haven't bought much. And again, the proof would have to happen, but I think it would cause a rally to take advantage of as a producer.
Matt, what do you expect in the way of changes for the USDA report as it's related to soybeans?
I could also see a little bit of a revision lower as far as yield's concerned. There's just a lot of those beans that got cut this fall at, the 9, 8, even 7%. And so, that could factor its way back in for sure. As far as demand goes, to be honest with you, Todd, I don't know that there'll be a lot of changes maybe this month, but I'm not so sure that we're not a little high on demand when we get farther out into the marketing year. Of course, cancellations are always a possibility. You look at what's going on with Brazil, even if southern Brazil falls off somewhat, there's no question that looks like it's going to be a pretty darn big crop. And so with that being the case, this world ledger is pretty burdensome. I guess I'm a little bit wary if we would get any sort of a pop in the market. I think that we've got to take advantage. But no, I'm not really looking for this to be a bullish report, so to speak. But I do think that if they would revise yield lower, it wouldn't surprise me at all.
Naomi, when you look at South America and think about both the Brazilian and the Argentine crop, or the total South American crop, including Paraguay, how big really is that crop, and how much of risk is there from Argentina to make it much smaller?
Well, you've got the Brazil number pegged by the USDA at 169 million metric tons. So Brazil obviously grows more than what the United States grows. And the Argentina crop right now pegged at 52 million metric tons. And so, looking at the Argentina crop and looking at global ending stocks being record large, you could take off, 5 million metric tons of the Argentina crop, and we're still going to have record soybean carryout on the global scale. So it's going to take a continued weather disaster to really get the market to be highly concerned, because, of course, as we know, if Argentina has a weather issue, the thought process is that since they're the world's largest exporter of meal and oil, soybean oil, that maybe the United States picks up some of that business. But Brazil is going to be right there ready to help pick up some of that business as well. So this Argentina weather story, as of right now, has been a wonderful reason to give the market that year-end pop. The bulls get Christmas, that type of analogy. It definitely came to play this year. But again, a tone of caution going forward, because it would take it's got to be a major drought in order to really move the needle in favor of suddenly the market's scared that we don't have enough global supply of soybeans. And to Matt's point, from the U.S. exports, we are starting to come up and go up with this new administration. There could be cancellations that come along. And hey, Brazil is going to be right ready in there to pick up the slack. So again, a tone of caution is where I'm at, and we'll keep an eye on South American weather.
Next week, when USDA releases that report, and that happens on Friday morning at 11 a.m. Central Time, we'll have those numbers up on willag.org shortly after the reports are released. You'll be able to check them out in the USDA Reports tab. If those numbers are neutral, what does the marketplace do, Matt Bennett?
I think with neutral numbers, Todd, my tendency would be that the rally is going to be, outlived itself, if you will. I really struggle to think that you'll be able to go up a whole lot more for the time being. I mean, this has been one heck of a nice rally. We can't forget, whether you're talking corn or soybeans, the kind of value that we've added to these cash prices. I mean, you look at corn and, some folks are looking, just rally off the lows back in, August. You're looking at just a massive increase in prices. And so bottom line for me, you got to take a look at that, as a grower and say, hey, what have I already gotten instead of what might occur from here? And so I'm very cautious here, Todd. On a neutral report, I don't feel like you could see the same tone moving forward that we've seen over the last 3 weeks.
Chuck, last week during the holiday week, trade tends to be fairly light. Was it? We're still in that trade mode, I assume, until we get to Monday of next week. Does it concern you at this point that rally we've had in the marketplace might disappear even before we get to the USDA report?
I think the market will hold together here simply because there's not at this point a lot of farmers selling. I would agree with Matt that we get to the report and there isn't any really positive news in there. You may see farmers decide to reward the rally, and we're going to be overbought, going into it. So I could see a market sell off as well as we don't get that positive news that we're talking about.
Yeah, and I don't want to put words into your mouth. So you, on the other hand, believe this will be a friendly report.
I'm going to say I believe it'll be friendly. But again, either way, I'm going to reward it here and hope it gives us some more. But if it doesn't, I would have to say we've had a good rally. And as a producer, I would say the producer needs to make the sale and go ahead and get that over with. And there's some inexpensive options out there if the producer wanted to go, on out to May or somewhere further out to see if something good happens.
Let's get a final word from each of you. Naomi Blohm from Total Farm Marketing out of West Bend, Wisconsin. Your final word for the day, please.
Yep, just, again, keep an eye on the value in front of you in terms of what you have for old crop at home. Basis levels, they're going to be flexing over the next coming week here, depending on places where the end users are getting grain in or not. We'll see if the big snowstorm coming through on Sunday affects anything with basis levels next week as well. But in general, I'm still mindful of that seasonal tendency for prices to edge a little bit lower as the month of January goes on. It will take an over-the-top friendly USDA report to buck that trend. And I'm just a little skeptical that we get anything over the top friendly as we're already starting to price in a friendly report ahead of it. So focus on the cash sales, old crop, and new crop. Matt
Bennett from agmarket.net, your final word?
Yeah, I'm the same way. I'm very cautious in here, Todd. Very thankful for the kind of rally that we've already seen. I think we kind of have to take that approach here. By all means, if someone cleans up as far as old crop's concerned, we know the farmer's always long. I know most folks haven't done a whole lot as far as 25 is concerned, but 25, we're sitting here well above the lows that we've had recently as well. So there are a lot of good things going on here, but I do want to be protective of the kind of profit margins we've created, or lack of losses, if you will, in a lot of places that we've created over the last 3 weeks.
And finally, Chuck Shelby from Risk Management Commodities, your final thoughts for the day.
I think one of the things, there's a lot of uncertainty in the world. There's a lot of uncertainty in this country. So generally when you have uncertainty, that's not a platform to really, extend some big gains in the market. So as the others have spoken about, we need to take advantage of it as producers and be defensive. And going forward, maybe there'll be some things in 25 that can make the market get stronger than we might think right now. But again, opportunity has arisen when we didn't think it was possible, and we got to take advantage of it as producers.
Commodity Week is a production of Illinois Public Media. You may find and listen to the whole of the program anytime you'd like. You can do that at willag.org. That's willag.org. Our thanks go to our panelists for the day, including Chuck Shelby. He's at Risk Management Commodities out of Lafayette, Indiana. Naomi Blohm at TotalFarmMarketing.com out of West Bend, Wisconsin. And Matt Bennett from agmarket.net in Windsor, Illinois. I'm University of Illinois Extension's Todd Gleason.